Well, for me, it's excellent. People are terrified,
Yeah.
which means that assets that I'd like to own are becoming cheaper. Uh, that's great. I think that most people that invest, most people that go to most conferences, pay slavish attention to the price of assets, which is a floating abstraction, and they pay no attention to value. What use is price information if you can't ascertain to some degree the delta between price and value? Someone in Sydney might say to me, XYZ Resources is selling for $2 a share. Is that good or bad? I ask them what they think XYZ is worth, and they say, I don't know, the bid or the ask. Well, that's very wrong. That's the price, it's not the value.
Yeah.
Warren Buffett famously says that the market in the near term is a voting machine. In the longer term, it's a weighing machine. If you're comfortable with the way people vote, perhaps normal markets make sense to you. But money is made on the delta between price and value, the difference between the way people vote, which is based on narrative, and what assets weigh or what they're worth. And I think we did a good job at the conference this year in explaining that dichotomy to investors in a way they understood, asking them to pay less attention to price and more attention to the delta, the difference between price and value. If let's say that you decide that a stock is worth $1. If the stock is selling for $2, it's probably not a good buy. Let's say that you bought the stock at $1, and let's say that nothing changed with the underlying fundamentals of the stock, but due to promotion or the market or whatever, the stock went to $2. At $2, the price relative to the value is precisely half as attractive.
Yeah.
People like the fact that the price went from $1 to $2, and human reaction, because it gave them pleasure, is often to buy more. But the fact is, if the price doubles with no underlying change in the valuation, the stock is less attractive. Similarly, if you think the stock is worth $1 and it falls to 50 cents, many people, if the stock falls from $1 to 50 cents, pay no attention to value and they sell the stock because it went down.
Yeah.
But if the stock goes from $1 to 50 cents, it's precisely 50, pardon me, it's precisely 100% more attractive. Discuss this circumstance in the context of a sale, which is to say you've had your eye on a winter coat, and suddenly, for whatever reason, the merchant marks it down from $400 to $200. It doesn't become less attractive. It becomes twice as attractive. And if more people would buy stocks the way women buy coats, the world would be a richer place. I construct a variety of net present value models, which is to say I look at the available documentation and I try and establish as best I can a resource estimate. I try and establish what the capital costs will be. I try and establish what the operating costs will be. I tend to use the forward strip in commodity pricing because I'm not smart enough to know where commodity prices are going to go most of the time. And I do a net present value calculation. My net present value calculation varies from country to country, depending on that country's sovereign cost of funds in US dollars in a 10-year instrument with a 300 basis point premium. So as an example, if I'm buying an exploration company based in Mali, where their US dollar cost of funds is 12%, I use a 15% discount. If I'm buying a company based in Australia, where their 10-year cost of funds in US dollars is 4.5% or 5%, I use an 8% discount. But my model is better than most people's because most people don't have a model at all. What I found in 50 years of doing this stuff is that the search for perfection is a form of procrastination. You have to give yourself a matrix of values, and you have to be able to assign some relative probability of values with the understanding that you're never going to be right. You're just going to be more right than the competition. And by the way, you're going to be more right than the brokers,
Oh,
whose
yeah.
has a goal of trying to sell you the stock. The stuff still sells at a discount to the global total cost of production. The mining industry would have you believe that the cost of production is, AISC, right? Mine cost, basically. But that's wrong. The total cost of production includes the cost of capital, which companies don't want to talk about. It includes social rent, which is to say taxes, fees, and royalties that the government takes. And importantly, it includes prior year write-downs on unsuccessful efforts, because those unsuccessful efforts generated the successful efforts that make the money. If you look at the total cost to produce a pound of uranium worldwide, it's about $60.
Yeah.
So the industry makes the stuff for 60 and they sell it for 50. They lose $10 a pound, and being miners, they try and make it up on volume, which is obviously problematic. The numbers get stranger yet if you consider the fact that there's at least a 45 million pound production deficit currently. And that means that you don't merely need to sustain existing production, you need to bring new production online. The incentive price for new production, given inflation in capital cost budgets, skilled labor, steel, cement, energy, is about $75 a pound. So the pounds that we're producing now and selling for 50, we're going to have to replace with pounds that cost us 75. Those are interesting statistics. The more interesting statistics, I guess, is despite the fact that the big thinkers, including some in Australia, don't like nuclear power, in countries even like the United States, which believe that they're rich enough to be stupid, nuclear power generates 20% of baseload and 13% of total consumption. As my former friends in the state of California learned today, a 3% plurality of supply relative to demand, that is, if you have a 3% surplus in the grid, you have brownouts and blackouts, is within the 5 or 6 year time frame. If the uranium price doesn't go up to the level that allows the industry to earn its cost of capital, the lights go out.
Right.
It's just that simple.
Yeah.
So I would ask the ladies present, after perhaps one more glass of wine, whether they believed it more likely that the price of uranium would go up from $52 to 75, or the lights go out, because those are the only two choices.